You have the strategy, but when you hit the buy button, your heart races. You see red and you panic sell. You know the exact trade you should take, but you're constantly paralyzed by the fear of loss, the fear of being wrong, or the fear of missing out. Fear is the single biggest leak in any trading system. It is a financial destroyer, a silent killer of consistency. Fear is the primary energy source for every bad decision, paralysis on entry, panic on exit, and the self-destruction of revenge trading. Most gurus tell you to control your emotions, but that advice is useless. Controlling emotion requires an incredible amount of willpower that vanishes the moment real capital is at risk. The solution is not to feel brave, it is to install the Fear Switch Protocol, a mechanical system that physically and psychologically prevents fear from ever connecting to your execution engine. You cannot eliminate fear, but you can build a set of non-negotiable fail-safes that force your action to be automatic, regardless of how your stomach feels. This video is going to give you the 3 mechanical fail-safes that elite traders use to physically and psychologically disconnect fear from their capital deployment. The first and most common manifestation of fear is entry paralysis, knowing the A+ setup is there, but hesitating until the price has run away. This is caused by the fear of immediate loss and the mental refusal to accept the possibility of the trade going against you right away. Rule 1. The written-off protocol and the pre-trade depersonalization ritual. To defeat entry paralysis, you must neutralize the fear of loss before the trade button is ever clicked. You do this by making the risk psychologically meaningless through the written-off protocol. The amateur's trap and the problem of cognitive overlap. The amateur looks at the trade and conflates their risk capital with their personal sense of safety and security. They think, I hope I don't lose that $100. That's money for my bill or vacation. This mental focus on potential loss generates immense emotional resistance and paralysis. The financial risk overlaps with the psychological risk to the trader's identity. The professional's pre-commitment and the mental bank transfer. The professional executes the written-off protocol. They mentally and verbally write off the risk. They affirm that the dollar amount of their stop loss is already gone, already spent. They treat that amount as a non-refundable, necessary cost of admission to access the opportunity. They view the market as a toll booth where the price of entry is non-recoverable. The deep psychological mechanism is depersonalization and System 1 overload. Fear is a primal, systemic emotion tied to loss of resources. The moment you are exposed to a perceived threat, your brain's System 1, the fast emotional thinking, takes over. By verbally and mentally writing off the risk before entry, you are depersonalizing the money before the threat is active. The trade risk is no longer your personal savings, it is a business expense already paid and processed. This immediate psychological shift dissolves the anxiety associated with pulling the trigger, restoring control to your System 2, which is slow and logical. Imagine bidding at a high-stakes art auction. The successful bidder doesn't panic when they place the bid because they pre-committed to the absolute maximum price, your risk. More critically, they have pre-authorized the transfer of that money in their mind. The moment they raise the paddle, that money is mentally spent and separated from their usable funds. If they win, the investment pays off. If they lose, they have no lingering regret or paralysis because they executed their plan perfectly within the confines of their pre-authorized limit. The fear is neutralized by the pre-commitment and the psychological separation. Always implement the mental bank transfer and the verbal lock. Before entering the trade, you must perform a mandatory 2-part ritual. 1. The mental transfer. Imagine your risk amount, for example $100 or 1% of equity, being physically transferred to a separate, temporary expense account in your mind. This visualization forces separation. 2. The verbal lock. Verbally say this exact sentence out loud. This dollar amount is now a business cost. It is spent. I have paid for the opportunity. My focus is now only on execution, not the money. This ritual must be repeated 3 times. This forces your mind to treat the risk as an allocated, non-recoverable resource, which kills the fear of losing it. The second most destructive manifestation of fear is panic exits, closing a profitable trade too early or violating the stop-loss when the price briefly moves against you. This is caused by the paralyzing fear of giving back profit, greed, and fear combining. Rule 2. The Higher-Timeframe Lock and the Visual Filtering Protocol. To defeat panic exits, you must physically and psychologically filter out the market noise that fuels fear. This is achieved through the Higher-Timeframe Lock and the structured use of visual filtering. The amateur's noise addiction and emotional amplification. The amateur stares intensely at the 1-minute or 5-minute chart, their eyes glued to the price fluctuations. Every tiny fluctuation, every sudden spike is amplified into a perceived disaster. This noise bombards the emotional brain with false signals, triggering a fight-or-flight response, panic, and forcing them out of structurally sound trades. The professional's focus and the signal mandate. The professional executes the Higher-Timeframe Lock. The stop-loss and take-profit targets are determined only on the higher time frame, for example, the 4-hour chart. Once the trade is entered, the trader implements a protocol to force their eyes to look at the higher time frame first and most often. The deep psychological mechanism is signal versus noise filtering, the reticular activating system. The lower time frames provide noise, random, chaotic fluctuations. The higher time frames provide the signal, the true market structure. Panic occurs when the emotional brain mistakes noise for signal. By locking your visual focus onto the higher time frame, you are actively leveraging your reticular activating system, RAS, to prioritize stable, structural information. You are deliberately filtering out the emotionally triggering noise, allowing your logic to manage the trade based on the actual structural integrity of the setup. Imagine a submarine captain navigating a chaotic storm. On the surface, the 1-minute chart, there is chaos, massive waves, violent rocking, and winds screaming. If the captain only looks at the surface, they will panic and attempt an unnecessary maneuver. But the captain focuses on the periscope and the depth gauges, the 4-hour structure. Deep below the surface, the water is calm. The captain trusts the deep structure, ignoring the chaotic surface noise. You must be the captain, trusting the calm, deep structure of the higher time frame and treating the 1-minute noise as merely the sound of water against the hull. Always implement the stop-defense screen and the visual priority rule. You must physically arrange your trading screens to enforce visual hierarchy. 1. Visual priority rule. Your main execution chart, for example 15-minute chart, must be placed on the second monitor. Your 4-hour or daily chart must occupy the primary central monitor. This makes the signal the default visual reference. 2. The stop-defense screen. The moment you feel the urge to panic, you must click the 4-hour chart. You are forbidden to look at the execution chart until you can physically find a structural reason, a break of a major trend line, pivot, or support on the 4-hour chart to exit. If the 4-hour structure is intact, you must stay in the trade. This is your stop-defense mechanism. This action transforms emotional panic into a mandatory structured review of structural integrity.
The third, most catastrophic manifestation of fear and anger is revenge trading, the aggressive, immediate attempt to quickly get back to even after a loss. This is driven by the fear of being wrong, ego injury, and the desperate need to restore self-image by proving the market wrong now. This emotional intensity overrides all logical thought and creates a compulsion to act immediately. The professional's protocol and the decision time gap. The moment the stop-loss is hit, the trader's system mandates a total, rigid shutdown. The system reset creates a decision time gap, a period long enough for the initial surge of anger, panic, and adrenaline to dissipate. By the time the trading desk is operational again, the emotional hormones have subsided and the logical prefrontal cortex is back in control. When a commercial pilot makes an emergency landing, their protocol is not to immediately refuel and take off again. Their protocol is rigid: shutdown, exit, audit, and mandatory rest. They do not touch the controls again until the entire system, the plane and the pilot, is verified as fully reset and operational. A loss is an emergency landing. You must follow the same mandatory shutdown protocol. Furthermore, the recovery involves a black box audit, the objective investigation of what happened. You must perform this audit on your trade, not your feelings. Always implement the mandatory 4-hour lockout and the classification ritual. The moment a loss is executed, you must engage in a mandatory multi-step sequence. 1. Immediate shutdown. You must use a pre-installed tool or physically unplug your monitor. The terminal must be closed. 2. The mandatory blackout period. Impose a mandatory 4-hour minimum blackout period. During this time, you are forbidden from looking at any financial screen, talking about the trade, or even consuming market news. The goal is sensory deprivation from the source of the trauma. 3. The loss classification ritual. After the first hour of blackout, you must perform the classification. Write down only 2 objective words: statistical cost if rules were followed, or operator error if rules were broken. By forcing this immediate classification, you redirect the emotional energy away from revenge and toward objective data analysis, effectively neutralizing the rage. You are focusing on the type of loss, not the dollar amount. All right, let's wrap up the 3 non-negotiable failsafes of the Fear Switch protocol. You must install 1. The Risk-Inversion Failsafe to defeat Entry Paralysis. 2. The Stop-Defense Failsafe to defeat panic exits. 3. The Revenge Kill Failsafe to defeat post-loss anger. Here's a key takeaway. You don't master fear by meditating on it. You master fear by making its destructive actions physically and psychologically impossible. Stop trying to feel brave. Start engineering an automated, emotion-proof system where execution is mandatory regardless of the chaos in your mind. This is how elite traders achieve mechanical consistency. If this framework is the mechanical switch you needed to finally trade without emotion, hit the like button and subscribe. See you in the next one.